What's the one iron rule that causes prices to go up? Of course, it's the law of supply and demand. It's very, very simple and it never really fails, does it? And Bitcoin right now is facing a supply demand crisis. If a lot of people want to buy something, AKA Bitcoin, and there isn't enough of that thing to go around, AKA Bitcoin, then you can be sure that the price will go in one direction only. That is up again for Bitcoin. Now, where Bitcoin differs from, say, the US dollar, of course, and you need to understand this, is that there's no limit whatsoever on how many dollars can be printed. They just print it, print, and just make more money. It's ridiculous. Bitcoin, though, absolutely hard capped at 21 million coins. In fact, even gold isn't as hard of an asset as BTC because no one can possibly put a hard cap on the gold supply. And let's not even get into the subject of paper gold and the market manipulation. The gold market, it's a mess, guys. Come on, it's ridiculous. Okay, so we know that BTC has a hard-coded limit on supply, but this year, the idea that a genuine BTC supply-side crisis is headed our way and that it's coming sooner than later has gained a lot more traction than ever before. I know we've been talking about Bitcoin supply crises for years, and there kind of has been for a while, but it just keeps getting worse. So let's look at why a Bitcoin supply crisis is becoming an ever-growing real possibility. So let's rewind back to March. There were a slew of articles picking up on the idea of an impending Bitcoin supply crisis. These reports, of course, centered around the analysis of the spot Bitcoin ETFs, which launched obviously in January, and by March had taken in an astonishing, eye-watering $12 billion of net inflows. At the same time, it was reported that around 3 million BTC, of course, was held by big entities, such as exchanges, miners, etc. And don't forget, obviously, that there are estimates that anywhere from 10 to 30% of the total existing supply of Bitcoin has been lost forever in boating accidents below the waves of time. Well, around 1 million Bitcoins locked up in addresses belonging to Satoshi Nakamoto, who may or may not be dead, maybe just laying on the beach in the Cayman Islands, shows up one day and brings the Bitcoin with him. We'll see. Adding fuel to the fire, of course, Bitcoin mining firm Hut 8 reported being contacted by major banks wanting to directly purchase BTC, citing supply shortages on exchanges and OTC desks soon after the BTC price had pushed up to new highs. And let's not forget, this was with the halving at that time still to come. The halving then, of course, went exactly as predicted, as it always will. Click, halving happens, block reward cut in half, meaning that mid-April onwards, new coin issuance was cut in half from 900 a day down to now only around 450 BTC being mined into existence every single day. But with the BTC price currently chopping around in the 60Ks and the halving behind us, how are those supply crisis predictions looking right now? Well, a couple of months further down the line, what's going on? So do crisis predictions still hold up? Firstly, we can see that after maintaining an incredible pace through March from the second week of April through to the start of May, that the ETFs finally experienced some net outflows and the accumulation curve looks to have flattened off. So as the ETFs were at the center of most of the recent supply crisis predictions and conversation, does this mean that the crisis has been averted? Or even that it was all just hot air the whole gosh darn time? Well, not really. Let me explain. There's several reasons for this. First of all, about those gosh darn ETFs, the cool down that we've seen recently is entirely natural and normal. It's fine. We had this big explosive move at the start, astonishing move, right? We also saw GBTC Grayscale Bitcoin selling pressure not only ease off considerably, but amazingly, for the first time recently since ETFs launched, GBTC for some reason had a couple days of net inflow. Who the heck's buying Grayscale Bitcoin? It's the worst ETF of them all. Anyway, otherwise, there's just been a big cascade of offloads from them. Anyway, then there's the likelihood of a second wave of ETF accumulation. This, of course, is where we need to really focus our conversation because wave one was just wave one of the tsunami. But before we discuss that, a quick note that every week my team and I are publishing the absolute best damn newsletter in the entire cryptocurrency business. It is called the Wealth Mastery Newsletter. Every issue is jam packed full of alpha and opportunity for investors on altcoins, meme coins, NFTs, DeFi, charts, and much, much more. You can join our 125,000 plus weekly readers for free using the link down below in the description. Check it out. Thank you very much. Now, back to it. So, keep in mind that the ETFs have put in place a permanent new Bitcoin investment mechanism. And up until now, we've only seen the very first wave of the initial money tsunami. In fact, BlackRock's head of digital assets explained this month that he foresees big institutional players such as sovereign wealth funds, pension funds, and endowment funds all getting in. We just had an announcement from Susquehanna, $420 billion asset under management firm, that they put $1 billion almost into Bitcoin. And in the months to come, we're going to see more organizations just like that getting in. It's not only BlackRock making these kinds of huge forecasts. Wealth management firm Bernstein, which handles $725 billion of assets, has predicted that the ETFs will become much more closely integrated with the private bank platforms, wealth advisors, and brokerage platforms, aka everybody's coming for the coin. Sounds pretty bullish, right? And that's not all. Big institutions have been sending in their 13F filings to the SEC, which of course they're required to disclose their quarterly holdings. And these have revealed that there are some big firms that are indeed buying into the ETFs, with early movers including BNB Paribas, BNY Mellon, as mentioned, Susquehanna International Group, with their $1 billion of shares, almost $1 billion of shares acquired, Hightower, Artemis Wealth Advisors, and a lot of others. Lots of big names there. Then there's the hard data about exchanges showing that this is crazy. You got to listen to this. This is nuts. Showing that the balance of Bitcoin held on cryptocurrency exchanges is now below 2 million, a figure that has been nonstop falling since January 2020, while exchange inflows at the same time that's happening are at their lowest rates in like 10 years. All of which feels in line with those earlier claims from the Hut 8 mining operator about being contacted directly by banks who want to buy Bitcoin straight from the source because they're having a hard time finding it elsewhere. And we should also look at how much supply, of course, is being held by those long-term holders, because this is a very important metric. The people who have exited fiat, this metric is still very close to all-time highs, and that impacts supply and demand because long-term holders, people like you and me, whales, all these people, by the nature of the category, these people are holding on for higher prices before they consider selling, or they're not selling. They've exited fiat. They're fanatics. This is backed up by a metric called Bitcoin Value Days Destroyed Multiple, which sounds a bit complicated, but essentially it shows older coins entering into the market to be sold. This tends to happen at bull market peaks. And right now, it looks like it has been reset almost to bear market levels, which is crazy. That suggests, again, long-term holders are not in the mood to be selling, which means, you guessed it, reduced available supply for all these buyers who want to buy it. That all said, though, there are indicators and observations suggesting the opposite. That supply, of course, will always meet demand and it'll be just fine. So let's take those in hand too. We don't want to just Moonboy bull post all the time. We have to consider the other side of the coin, the other side of the argument. Firstly, while the total Bitcoin supply is hard-coded and knowable, there are no similar guarantees about the levels of demand for that. Traditional investors outside the crypto bubble, how much Bitcoin do they really want? It's still a very novel digital asset. And as mentioned, ETF flows have, for the moment at least, calmed down. While we're expecting continued waves of interest to come in, what if they don't? Also, when whales wake up and previously dormant coins start to move, as recently happened when a 2014 whale wallet shifted 1,000 Bitcoin, right? We can see the potential for suddenly increased selling pressure. There's a lot of those whales out there. Whales have gargantuan amounts of Bitcoin. Now, that may or may not be absorbed by ETFs, the demand from that. And what's more, there's been an increase in the Bitcoin total OTC desk balance. Well, it went down, right? But it started moving up again in the past few months. The BTC price made new all-time highs, meaning that there's again an increase in supply available on the market through this particular avenue. But, would you bet against Bitcoin in a bull run? Ultimately, as we said at the start, this all comes down to supply and demand. A supply crisis is 100% plausible, and to an extent, there's always a bit of a supply crisis with Bitcoin. Just how serious of a supply crisis? There's a long list of factors suggesting it's coming down the road in a very serious way. The price will go up much, much higher, but only, of course, if bullish demand stays and is real. Maybe at this point, we can look back at previous bull markets and guess what? In 2013 and again in 2017 and then again in 2021, the FOMO was insane and absolutely real. Demand went through the roof. And while you could argue that, well, those were just different times back when the Bitcoin market cap was so much smaller and we can't really make that comparison anymore. Well, those periods, by the way, all occurred without ETFs, without TradFi boomer money having a way to just easily ape into Bitcoin. We have now laid the rails for easier retail participation, but also institutional FOMO and participation, something that's never been really this present before. Also, one other factor to consider is liquidity in the markets, and that's also pointing towards increased demand coming ahead. We can see that the M2 money supply just flipped positive. The global liquidity index appears to be rising in line with our cyclical trends that we can expect in the market, which means, of course, more money in circulation, searching for Bitcoin. That equals more appetite for risk assets when more money's in the market. A supply side crisis may not be, nailed 100% certainly. Nothing in crypto ever is. But the question is, would you want to bet against the possibility of this supply crisis, which is already starting to happen in a Bitcoin bull run with global liquidity increasing? I want to finish up by thinking about one last question. That's a little bit philosophical, perhaps. What's the difference between currency and money? And what does that have to do with Bitcoin? Well, of course, it's all about currency versus money, isn't it? Is it better to own money than to own currency? But what does that statement actually mean? Well, one way to look at it is that money is the durable, stable store of value underlying a currency, which is a convenient medium of exchange. Dollars, for example, they're a currency, right? They're easy to use. Paper fun tickets, right? Historically, they used to be backed by something like gold, not anymore. And of course, it's gold that was the real store of value. But that's no longer the case. Dollars are just backed by air. So we have the fun tickets, but nothing really backing up our fun tickets. So we have currency, but not really money, no store of value behind it. Yeah, you can still buy gold, right? But this is where Bitcoin comes in, because Bitcoin is a store of value, a digital commodity, a hard money in our broken fiat system. And yeah, I know it's volatile, but a supply crisis will occur as people seek to change this junk for something better. And there's a lot of this junk, with more of it being printed all the time. And people are going to trade it in for hard money, of which there is very little Bitcoin. That all said, though, maybe we shouldn't even be calling this a crisis at all, because it's there by design. It's how a store of value works. And Bitcoin is a hard capped, deliberately store of value coin. So if you've planned ahead and you've been stacking, then a future supply crisis is actually really good news. Thanks for watching.